Hey traders, today is Thursday, February 26th, and I'm Michael Boutros, Senior Market Analyst with StoneX, here for a quick multi-time frame look at Bitcoin. So we're about 52.5% off the record high. We're nearly 39% just off the January high, and the bulls are attempting to snap a 5-week losing streak here. Here's what the weekly chart looks like. We're coming off the downtrend support structure we've been tracking for this pitchfork off of the record highs. The last 3 weeks have been capped by near-term resistance at the objective low week close for the year. That gives you 70,283. So the question is a more significant low in place? I still think there's some more downside risk to go. Near term, however, you could see a little bit of a rally if we're able to mount a close above that level. Some things to consider. The last 2 crypto winters on the 4-year cycle, as they're called, was back in 2021. That decline saw a move of 77% off the highs and lasted roughly 52 weeks before we started to really mount that upside thrust. Privy to that was that 2017 decline, also lasted right around 52 weeks. That was a decline of nearly 82% off the highs. Now, it doesn't mean that we need to take a year before we clear it out, but certainly on the decline that we're in right now, this is only 20 weeks old. So it's a little bit early for us to start suggesting that a more significant low has been registered. That being said, near term, certainly if we do mount a assault on that 70,283, we could see a little bit of a recovery. Here's what it looks like on the daily charts. So the low day close of the year converges pretty close to the low week close, and that opens up to 70,283 into 70,531. That's now resistance, has been ever since we broke below, and that's the level you would need to clear on a daily close basis to suggest the threat for a larger recovery. Now, the big zone of resistance and sort of the level of which, if broken, would suggest that there is a more meaningful low in place is 74,434 into 76,159. You're talking about the 2025 low close, the 2025 swing low, and 2 equal legs off the high. The 100% extension is right in there. So even if this move is just a corrective bounce within the broader downtrend, that still would allot the potential for a rally towards that 74,700 level without invalidating the downtrend. The other thing to keep in mind is that the last major recovery we saw in November, that recovery lasted 8 weeks, so basically 2 months, and was a rally of 21.6%, still was just a bump within the broader downtrend. So you're already seeing people on the X universe starting to call the low here. I think it's a little too early, might be a little too premature to make that call, but the levels are pretty clear. Ultimately, the bulls would need to clear 84,000. That's the 38.2 retracement of the entire advance off the lows in 2022, and the 2025 low week close comes in at 83,712. That's the level that we would need to best for us to invalidate the entire downtrend, and basically would suggest not only is a more important low in place, but a larger trend reversal is underway. So support comes in right at the 2026 low close. We rebounded off it 2 days ago. That's 62,795. The 2 downside levels I'm still looking for as major inflection zones in price are down at 57,885 into 58,725. That's the August 2024 low week close, and that's the 618 retracement of that rally off the 2022 low. Beyond that is 52,204. And that's, again, the 100% extension of the decline off the highs. If you go back to the weekly chart, this first level, that 618, not only converges on downtrend support, but it converges on that upslope from the 2023 lows. And if we take the time measurement of this decline into those regions, you're looking at about 32 weeks before you start to head into that 57,000 level. The more significant 52,000 level puts you right on the 54, 53 week range. And again, that would take you out to October. So there still might be some more pain to go here for the crypto bulls before we start to suggest that there's a larger turn underway. Near term, if we do best 70,000 to 70,531, it would suggest the potential for that larger recovery within the downtrend. These interior lines here are the 38-2 retracements, a little bit non-conventional. We typically look at the 25% and the 75% interior slopes. This is the 38-2 retracement of that slope, converges right on that resistance zone, basically first, second week of March. So keep an eye there. If we do pop through that low day close, a close below 62,795 puts you right on the resumptive path. And again, both of those levels on the downside, much more significant from a technical standpoint and could produce a larger recovery and maybe even a more significant exhaustive low. We'll try to keep you updated, as always, on X. Stay nimble into the monthly cross here as we open up March trade, and we'll keep you updated. As always, best of luck trading, and we'll see you next week. Cheers.